I think crude oil prices are going to get to $50 before Christmas. In this video, I'm going to give you my fundamental and technical analysis for this prediction. Let's go. Hi guys, it's Eddie, aka the NocTrader, your friendly neighbor swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. So I actually haven't done one of these videos in a while, just straight up technical and fundamental analysis of one specific instrument. So I thought I'd look at crude oil because this is a high conviction trade that I'm actually in right now already. I believe crude oil is going to hit $50 before the new year, or before Christmas. And here's why, just from a technical aspect. I'm going to go through the fundamentals in a second. But straight up technicals, there's quite a lot of confidence that I want to show you as to why I think crude oil is going to hit $50. So before I even get into any of these things, straight up, first thing I looked at was on the daily chart. On the daily chart, there was lots of the 180-day simple moving average is below price and curving up. So that tells me that there's bullish momentum overall. So whenever price goes underneath, or whenever the 180-day simple moving average goes underneath price and is curving up, it's always a sign of like bullish momentum. So I believe that it's going to carry on up just from that alone. That's just one thing. But obviously you can't use one indicator as a measuring stick for a prediction. So then the next thing I did was that I started looking at price zones. So I started looking at key significant levels of price, and I saw that obviously there's on the daily chart there's quite a few key significant levels that we can look at. There's one here, but I don't actually go that far back because it may not be significant that far back. So what I did was that I looked at key significant levels, like for example this one here, probably not as relevant anymore because it's already been passed, but this would have been a key significant level, and it's already retested this level. So that already tells us that price has broken out of a key level and then it's already retested it to climb up, and that retest is where I actually took my first entry. I went down into shorter time frames as well, and then what I saw was that I've been messing around a lot with Fibonacci and Elliott wave as a strategy for trading forex. And it has actually served me well in one of my most recent trades, but I'll get onto that in a minute. But here it's been really following it. So Fibonacci levels, it was 1, 2, 3, 4, 5, and then I think that was kind of like a B, C, something like that. I believe that's the Fibonacci levels I was seeing. But I also think that this whole level as well was a 1 as well. Well, and I also think, actually no, that's the wrong. I should also think that this was the start of a new wave here, and once it got all the way there, I saw a retracement back, and this level here is that level that I just marked up as a previous support. Now it became a new resistance, broke out and became a new resistance. That was actually where I entered my first trade. I entered along here and I rode it all the way up to here. Now this little square box that I've drawn here is like a new kind of resistance that price has been tackling with for quite some time. As you can see here, you've got long candlesticks, long wicks here. Long wicks. That means that there's been a lot of selling pressure here. So a lot of buyers trying to break out at this point, but then sellers have caused a wick rejection because there's too many sellers in this area. But before I get into that, one of the things I noticed was that there's like a bull flag. So bull flags, if you know anything about bull flags, price goes up, comes down, goes up, comes down, and then it breaks out. When it breaks out, normally your take profit is based on how far up it climbed in the previous motion. So if you can see here, I've got I took a ruler tool and I checked the price from this previous low, not previous low, but like where the bullish momentum started up until it entered into the bull flag. And if you go from here to here, that's 11 days, it went 600 pips. So what I do is I want to copy this line here, copy it here, and then drag it all the way here. And what I've done is that I've dragged it to the base of this entry here. So this is where I entered my my first trade. And if you drag that distance all the way up here, it gives you 11 days. If you went 11 days and you went up 600 pips, you would exactly end at $50, or just short of $50, but that's close enough for me. So that already tells me that that bull flag looks like it will probably get respected. Now the time frame, 11 days, it may be 11 days, it may be a bit longer, but I don't think it's going to take up till Christmas. I've drawn a line actually for New Year's, but I think it's even sooner than that. I can think that by Christmas, price should have hit that zone, that $50 mark, just based off of this bull flag motion alone, and also based off of the Fibonacci levels that I've been looking at. If we draw Fibonacci from here to the $50 mark, assuming that's like the take profit zone, the area at which we entered was the 38.2 level, and the area that we're at now is at the 23.6 level. And if you also draw Fibonacci from that low here, so this low here at like $40.42, which was kind of like where the bull flag started. If you draw Fibonacci from there all the way to this recent high at 46.29, the 38.2 level is exactly kind of where that first entry was, which is the base of the bull flag, which is where the descending channel stops before it starts climbing again. So there's a lot of confluence. I hope this kind of makes sense. There's a lot of lines I've drawn, but I'm looking at a lot of different strategies and they're all telling me the same thing. So Fibonacci levels are being respected, and if you draw Fibonacci, as I said, from here to here, the 61.8 level is at $50. That's one thing of confluence. Another one was the bull flag, as I said before, and another thing is just key levels, so key support and resistance levels. If you go back to the daily chart, as I said before, that $50 mark is of importance, is of significance. It goes way back. The significance of the $50 mark is very important because it found a support here in February earlier this year before it kind of broke out. It's been a key support for quite some time. Even going back into 2018, it was a previous support and resistance. So I think it's going to climb all the way to the $50 mark, and then what it does from there, I do not know. Also, there's also some fundamentals that you have to take into consideration as well. So OPEC, which is the Organization of Petroleum Exporting Countries, aka just the world cartel for oil production, had a meeting on the 3rd of December, and this was all about production levels that they're going to hold for the next couple of months. They always have meetings every couple of months just to discuss how much oil production they're going to release to the market for the next coming months. And this month, actually, let's set the stage. So earlier on in the year, a couple of OPEC members went a bit rogue and started releasing a lot of oil in the market just to devalue it, and we saw a bit of a crash, and which is why they've had a well, you can read this here. The meeting reaffirms the continued commitment of participants producing countries in the Declaration of Cooperation to a stable market. So what that means in layman terms is, guys, man, you need to fall in line, because if you don't fall in line, this cartel isn't going to work if people are doing rogue things. So this is the press release of the meeting that they had on the 3rd of December. I'm not going to read through all of this stuff because the important stuff is here actually. So beginning in January 2021, the DLC participating countries decided to voluntarily adjust production by 0.5 million barrels per day, from 7.7 to 7.2. So what does that mean? That means that the OPEC are going to lower oil production by 0.5 million barrels per day in January. And Economics 101 states that when supply goes down, demand goes up. So price should go up as a result of this. So this is just the fundamentals to accompany the technicals that I've just shown you. And when fundamentals and technicals align, I'm pretty sure, well, not pretty sure, but I'm pretty confident in the trades that I make, especially when these two things happen together. And this is all from the horse's mouth. This is the OPEC press release. So back to the 4-hour chart. So what is my strategy? How am I playing this? Well, I've already entered a trade here, along here, and I'm hopefully going to ride it to $50. Now, I've actually taken a second position here. Right now, I'm just buying the dips. Hopefully, I don't get stopped out of any of them, but I've taken a second position here because I've seen like a trend line forming here. So I took a second position here because I wanted to take a position when price retraced and retested the bull flag's old resistance support. And I took a third entry here because I saw this as like a key support and resistance zone. So if price broke out, I knew that I was going to retest it and then hopefully carry on climbing. And I don't see it breaking below this point again, but just carry on zigzagging up. It may come back and retest this line again a second time, but I don't see it breaking through it. So all in all, I've taken 3 positions, and the thought process behind that was, with the bull flag, it goes like that. And then this is kind of like the lines, kind of. So what I did was that I took a position here, I took a position here, and then I took a position here when it broke out of the bull flag and then the retest. So I've taken 3 positions overall. One here, one here, and one here. And I don't know if I'm going to take some more, we'll see, but I'll just be buying dips, but hopefully it gets to $50. If it just decides to tank, then the stop losses I've set for each of them are quite different. So the one here, the stop loss is just underneath it. The one here, the stop loss is kind of just underneath it here. So the way I chose where my entry was that I went on the 1 hour chart. So there's so much messy lines here. Sorry guys, I know you guys hate my messy lines. But God, that's how I trade. I drew a Fibonacci. I drew a Fibonacci from the base here to this kind of peak here, and lo and behold, the 61.8 level is where it retraced to. So that's where I decided to take my long, and then my stop losses are basically just on below this line. This line is kind of like my support line. I don't believe that price will break this line. It may do, and then I might get stopped out on maybe 1 or 2 trades, but I still believe it's going to $50, so I'm not too bothered about getting stopped out on 1 or 2 trades, because I believe the overall trend is upwards right now for crude oil. So that's why I'm trading crude oil. That's how I'm trading crude oil, and we'll recap on this in a couple of, maybe 2 weeks time, to see if it hit my take profit, and I'll show you where I'm at with this trade. So yeah, that's me guys, Any aka the NocTrader, signing out.